Hey, what is up, traders? Welcome to Trade Masters, your midweek show where two of tackle trading's best go head to head to battle it out for the crown of the best trading setup of the week. I'm your host, Tim Justice, and every Wednesday night here at 6 p.m. Eastern, we break down a couple of trades in the market that two of our master traders have found and show them to you on the screen, break them all down from a technical perspective, multiple time frame perspective, and give you the analysis. We're going to throw those up on the screen here in just a minute and see which coach has the sharper eye for their opportunities that are out there. We're talking setup strategies and a little friendly smack talk because it's not just about who wins, it's about how learning how to think like the pros as well. We've got Coach Matt from Tackle Trading and Coach Bobby D from Tackle Trading as well. Welcome, boys. It's good to have you both. And before we get into the analysis, the one thing I want to promote here today outside of our YouTube channel, which you should subscribe, like, and participate here whenever we do have content going up. But we have a webinar coming up, a class that is the Master Trader. And to join the Master Trader, you just need to set up a pro account at Tackle Trading and you can register. Matt, this is coming up on the 17th and the 18th here, not too far away. Pitch it a little bit.
Yeah, 4 days, 23 hours, 55 minutes, 34 seconds. I'll be talking about a bunch of technical analysis. And the only thing I'm going to say here is if you love Trade Masters, which I know I do, you're going to love Master Trader, which teaches everything you need to know about being a master trader and learning technical analysis, trends, patterns, support, resistance, prep work. In round two today, me and Bobby got the battle of the reversal candidates, and get excited about that. Two really good reversal candidates. Well, I'm going to be talking about reversal analysis, how to spot reversals, the process to go through reversal analysis in on day two in Master Trader. So we're going to have a lot of fun next Monday and Tuesday. If you are new to tackle trading and you hit the link in the description below, click on register now, and you can sign up for a free trial membership, a Tackle Trading Pro membership. And if you're already a pro, just once again, just hit the register here and you can come and join me in Master Trader. Once again, as a pro member, you can attend Master Trader as much as you want. We do it once a month for the pros, and that's going to be on Monday and Tuesday.
You know, I always loved a good battle of the bands as a kid. Even the movies around Battle of the Bands, they're always fun. We're gonna have a battle here in round one and round two, and look at some reversal stuff. Bobby, how you doing today, sir?
Oh, I'm doing great. I'm just happy to be back here on Trade Masters. Unfortunately, Frank wanted to take a day off and he was tired of losing. So,
I was going to say, had to took that licking last week, Bobby.
so I think Matt wants to, see if he can you pull off the win this week. So I'm happy to be back.
Pull off the
Yeah,
win.
yeah, that's right.
Pull off the
We,
win. Oh,
we got
now
a
my
couple of
competitive
candidates.
juices are flowing here, Bobby. Let's have some fun.
Well, you better compete. I mean, come on. Let's go. Let's go. You've got the ES up here, Matt.
Yeah.
We are moving a little bit intraday. You want to talk a little bit about broad markets before we get into analysis?
Yeah, I just think we're going through some important moments, and obviously every single day we navigate this conversation as a team in the Traders Lounge in our Tackle Trading Discord channel. But just seeing a little bit of hesitation here, right around the 6,900 level here today. That was kind of the tippity top of today's price action, and today was really kind of how shall we say, a boring day in the market, quite frankly. Staring a lot of tight ranges on the intraday side of the equation. But as the futures reopen here, we're seeing a little bit of volatility to the downside, testing one of those extremely key areas of intraday support here, right around the 68.60 level. You break that, you start working down a little bit there. So there's just something to keep an eye on as we do navigate that potential 6,900 level here that got tapped in the market here today.
Yeah, absolutely. And obviously, whenever the news and those headwinds can pop up at any time, it can change the charts. But that's where, watching the technicals, watching for confirmation, knowing where your levels are, that just gives you that secondary, kind of warm blanket a little bit to know, okay, this is where I need to make decisions. So glad you brought that up and glad we could break that down a little bit.
Well, just put it like this, Tim. Everything you're looking at tomorrow on the bull side is a lot easier if the market's going above 6,900. That's where you get that tailwind by the market, where the rising tide lifts all the boats. Well, that's above 6,900. That 6,900 level is kind of that rising tide level. You start breaking that, market starts supporting other things out there. So it's something to keep an eye on. A little bit extended. Just keep an eye on that 6,900 level as we do navigate these next couple days.
Absolutely. Good point. All right, let's get into the analysis here. Let's start let's go with Bobby first. The defending, champion here, coming back for the next week. Bobby, you are starting with Google. Talk to us about what you're seeing in the chart here, and let's break it down.
Yeah, Google, today's candle wasn't the most inspiring candle, but overall, I mean, the structure is there. I mean, it didn't break any, key support levels or anything. It's still holding that nine, moving average here on the daily. It's still holding that, high base pattern. Um, the first thing I like to do is I always go and look at the sector. So like XLC, XLC is still in a decent spot when you're looking at the communication sector, which Google is a communication stock. I mean, you did get a little red candle today, but it's still structurally, if you look in the longer term time frame, it's still still holding that trend. It's still in a good spot, holding that 20 moving average right there. And you break that trend, you can get another leg higher into that 119 zone. And so I think it's still structurally strong on XOC. So when you come over here on the Google, I think everything just tells its tale there. So you get a break of this 292 area here on Google. I think sky's the limit, because if you go to a weekly chart on Google here, you're at your all-time highs. So sky is definitely the limit here. It can go up to 300, it can go up to 350. So you just never know what Google will do, being a Mag 7 stock. Overall structure wise, I just think, for on here, there's a plethora of things you can do. You can either buy shares, if you really want to just buy a few shares and just play the stock play, you can do that here on Google. Options on Google are very liquid. I think, you can go out and play, you have your monthlies and your weeklies. And for me, I like when I go directionally on a play, I like to go as far out as possible, like the Decembers or Januaries in this case, just because you don't want the theta to to start decaying quickly if you go shorter term. So for here on Google, I was looking at the Januaries, but I was definitely looking at the Decembers for sure. Over going a little bit out of the money, I was looking at the 300 by 310. um, One thing I will say on that, the delta is, I believe, 11 on that one, which it's not, doesn't really fit the rule of 25 delta, which is your rule on a bull call spread. But my thinking on this was, you get your confirmation above the breakout zone, you get closer to the 300 zone, your delta will go up as it goes more into the money. So you will get into the round to that 20 delta, as you get closer to in the money. So for me, I like to go a little bit out of the money, because it's, not only it's a little bit cheaper, but you also, if you get that confirmation, you do get that higher delta plus. um, sky, like I said, sky's the limit here on Google, and anything can happen on this one for sure.
Mhm. Matt, just for kicks, give me the price on a 293.10 right there. If I was comparing a couple things, I like their idea about getting out of the money, reducing cost, all that kind of stuff. I think there we go. Okay, 660 against a 20-point spread. That'd still be reasonable as well. Give you a little bit of open window. There's a bunch of different ways you can play it. It's great that there are liquid options. It's great that it's one of the leadership in the market. I got a question for both of you, just as somebody who's, listening to Bobby's analysis. Does it bother you that Google's in a different pattern than the sector?
Um, I'll go on that one. Not necessarily. If the sector breaks its current trend, like if the sector was starting to come down, Tim, and we were talking about Google
Mm-hmm.
going up, I would have more concern there. But we're talking about the sector after a pullback, sitting in a pretty decent position. Let's look at XLC here very quickly. In a pretty decent position on the weekly time frame here. And so you've really got this as a flag-based pattern on the weekly chart that's coming into to a pretty important support level. And the whole thing about the top-down approach to the market is like I talked about on the ES. You get above 6,900, you get the rising tide, you get the tailwind by the market. It becomes a little bit easier there. When you're looking at communications, I don't currently see communications in the current technical setup being negative to Google's potential breakout here. unless you close underneath
Mhm.
the 20, and then everything in communications will look a little bit dirty. And so I don't see that. In fact, I see it in a situation where you could look at confirmation here on the weekly chart on communications with a little bit of love here by the market. And that way, Google would be a little bit of a tailwind there. And so I don't see it as a net negative. If we were right here on this candle and we're talking about Google breaking out, I would be a little bit concerned because we're now starting a pullback
Mhm.
series. Well, we're already through at least a majority of that pullback series, if this is just that, a pullback on the weekly chart. And so I don't see it necessarily impacting the Google trade unless you see a break one way or the other. Then obviously, because of where you're at from a positioning perspective on communications, that would certainly play a role there. But as of right now, I don't see it providing either side of the equation.
Yeah,
What about
thanks
you,
for
Bobby?
clarifying. And I love the stock. Yeah.
Yeah, no, I mean, I think Matt hit it on the nail. There's really nothing to add. I mean, it's like I said. I mean, it's the biggest thing for me looking at this chart and looking at Google is this weekly. It's holding that
Yeah.
20, and I just think that you get that confirmation. Google's going with it. I mean, I'm not quite sure what the
Yeah, exactly. And Google's one of the best stocks in communications right now. And so if
Yeah.
the market
Yeah.
and Google's think about it like this, Google's at that tippity top trying to break out at the tippity top despite what communications has done. What can Google do if it gets some communication love? That's where I get a little bit more excited because Google's been doing some great things counter trending communications. Well, maybe we get a little Momo here if it doesn't counter trend. So I could see where, that's obviously a question that we play a role in, and because a lot of us are top-down analysts in the market. But right now, I see it more as I see a higher probability of it providing a tailwind than a headwind, if that makes sense.
Nice. Yeah. Thanks for the answer to the question. All right, great. That's our first one here. And Google's going up against one of your picks here, Matt. Affirm.
Can
What you
can I
got
only add
on?
one thing
Oh,
here on Google?
yeah. Yeah.
Because I think the trade setup is a really, really pristine trade setup. And if you're looking at Google, this is the secondary pattern. You either trade this pattern or you don't trade Google. Like that's just kind of how I see it. The only thing I would say is what I was looking at because I was also looking at Google for Trade Masters here today, and I was also equally looking at a bull call spread here as well, Bobby. So great minds there, brother. Bobby's a little bit more conservative on that spread, kind of going starting at the 300 level. I equally was looking at starting at the 300 level as well. I like starting, especially when you're thinking momentum here, Bobby. I
Mhm.
kind of like starting that a little bit out of the money.
Yep.
And that $300 strike price just kind of stood out because it's a significant whole number, slightly out of the money. I was only the only difference between me and Bobby on this one is I was looking at the 20-point spread, similar to what Tim was
Mhm.
talking about, but the 300 by 320 slightly out of the money. A little bit more cost, but you'll capture a little bit more of the overall price appreciation there. So, uh, dealer's choice on how you set that strategy up. I just wanted to add my 2 cents on that more than anything. I
Yeah.
like the trade setup there, Bobby. Well done, brother. All right, I'm gonna go with my first one here, and I'm gonna go with one of Coach Frank's favorites. So I know I already got his vote, team. But this thing is just setting up in what I would consider a really good technical setup here. And I'll just talk a little bit about what I like about the technical setup and from a pattern perspective, support resistance perspective, then we can talk a little bit about strategy here. But a firm, kind of boring recently, just kind of stuck in mud between really kind of the 67.5 level and that 80 level. Let's call it just a 10 point range here. And so you look at a pretty standard consolidation pattern here. Tried to gap down on the earnings, fought right back up. So it tried to get down and dirty. And this was not a bad earnings report, by the way, but it tried to get down, came right back up the next day. And now you're talking about perhaps going into that potential breakout here. And so on the daily chart, you're getting above the 50-period moving average for the first time ever since we saw the breakdown just a couple months ago. That's obviously a step in the right direction. Number two, when you come over to the weekly time frame, I really think the weekly time frame is doing the heavy lifting here. Don't get me wrong, I like the consolidation break, but the weekly chart is more of just a pullback scenario here, as you did officially set that all-time high at $100. really kind of foundational levels at the 90 level. And when you're looking at that pullback on the weekly chart, it wasn't that aggressive of a pullback, but it did get into that 38 to 50%, which, Tim, you know what they say about a 38 to 50% pullback, brother. That is the Goldilocks number that we like to look at there. And so on the longer time frames, you like that support level that it's kind of coming into. On the shorter time frame, you like it coming into some neutrality and breaking back up. Now, the ultimate question on a directional trade, and I'm going to teach this next Monday and Tuesday in Master Trader, but it's always about the set method. Where's your entry? Where's your stop loss? Where's your target? And I like to be I'm an analytical guy, so I like my step one, step two, step three. I like my processes. The first thing I like to get is entry price. When you're already talking about confirmation and this stock has already confirmed its move, you can simply look at the high of the day and say, okay, let me use my ATR rule, 5%, 10% of the ATR above the high, just to make sure you're getting it above that high of the day so that you get involved as the momentum continues. Don't get me wrong, I like the momentum today, but each day is a little bit of its own ecosystem in the market. I like today, but I want to make sure today gets continued tomorrow, which means just slightly above that entry. Now, there is some zones at $80 that more conservative traders might take a look at to say, all right, Matt, just make sure that you get that number right above that 80 handle, because there is some wicks here at 80. It's also one of those whole numbers that can certainly attract a little bit of intraday selling. And so whether you're using the high of the day or that 80 level, you're very close. I would consider this already confirmed, however. So like the entry is all about the pattern. The pattern's confirming on a breakout out of consolidation, confirming the pullback on the weekly time frame. And so you've got two time frames. We know the intraday is moving in our direction, but you got the daily chart now moving in the direction. You got the weekly chart now moving in your direction. That looks pretty good. Now, stop loss here, I think you're looking at the base right here, kind of the 75 handle right there, and saying, okay, that 9 EMA is going to be at 75 tomorrow. And that's kind of the foundation of the base here. And so I like anything underneath 75 as the initial stop loss, utilizing the 9 EMA as the gauge. Now, for the target here, I asked Frank what he would target because Frank loves a firm and he's had a lot of success on a firm. So when you have a lot of success on a stock in its history, you have a tendency to put the beer goggles on a little bit and say it's going to go to the moon. And Frank, you told me it's going to go to the moon. I said, Frank, what do you think about a target of 90 to 110? 90 being kind of the 10-point range on the breakout. You got these bodies up here around 90, and then you got the tippity top of the wick right there at 100, which means 100 has to be a target. 90 doesn't have to be the target. Coach Frank says, what are you talking about? Target 100 and then wherever you want to go. He loves this stock. He gave me a lot of confidence, but I'm going to stick to my targeting methodology. 92 by 100 is my official target, but at the end of the day, $100 is my target, and let's see what we can get above that level. So if Frank's right, I think we all just kind of be like, giddy up and go, 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 baby. But like the setup here, entry, stop, target, feels pristine. Let's giddy up.
And one thing that's really valuable there that you brought up is having multiple targets. It's a concept that you teach in the Master Trader. You got that first target for your swing setup to make sure you got your reward to risk, and then a secondary target that you could trail on or you could do a lot with, you could scale out of. There's different management techniques. And if you're out there and you're a trader, you got to know your management plan. You go in with a plan and then you execute and then you can adjust as you start to hit those targets, one and then the second one as well. I love the setup. I'm with you and Frank. I think it's great. Bobby, what are your thoughts on a firm?
This one is a wonderful, setup. I was actually had this one on my list, not the pitch and trade masters, but you know, I've always had success on a firm. Just this break of this 50 moving average is just, for me, I can't pick between Google. I do both. So,
I do like them both too. I do
so
like them both, but Google's on my list too. So
So, you played, you have different strategies for different stocks. And so I think this one definitely, being a cheaper stock is, there's a lot of different things you can do with it for sure.
Yeah, I'm
Love it.
also just from a strategy perspective, I'm definitely looking on the option side of the equation. I think you could easily do a bull call spread here, and I think you could easily go slightly out of the money calls and go to the moon, just depending on how aggressive you want. Typically, on something like this, I'll start something out of the money, and then at the first sign of weakness, sell something out.
Hmm.
Great.
Love it. Let us know what you think out there, team. Pop
All
it in
right,
the
Tim,
chat.
which
Do you
one?
like Google or Affirm? Let me know.
I am
And
officially staying with my vote for Affirm, Bobby, because, well,
I mean,
yeah.
I'm gonna stay with mine. Google's definitely, it's like I said, it's a Mag 7. I love Mag 7 stocks. So I'm gonna stick with Google.
both strong,
Um,
both for different reasons. I'm if I was gonna actually pick, I think I'd pick Google and go with Bobby. I like the strength of momentum. So
By
yeah.
the way, me, Frank, and Bobby in the prep show before Trade Masters, we went through a little bit of an activity going through the alphabet. How
Hmm.
far in the alphabet could you get before you didn't find a decent bullish trade?
Yeah.
I just want to show you a little bit of it, just very quickly. Okay, A, breakout. B, breakout. C, breakout. Which one do you like better? I can go on. Dominion, multiple time frame breakout. E, momentum breakout. F, Ford, pullback with confirmation. I could go on. We actually got to I before we're going to do anything.
I love it. Out of all those, I don't know. I think C and D would look great to me. There's a
Well,
lot
if
there
you
though.
add a
A, B,
B
C,
and an
D.
A together, you get a pretty good short opportunity on Boeing. And if you add the B and you want to double up that, you give even a better breakdown on Baba.
Fun with letters. Reminds me of Sesame Street as a kid. I like it. Let's go. All right. We are going to rotate back and we're going to go back to Bobby here. And Bobby, you are up with MODG as your second pick for the night. Walk us through the analysis.
Yeah, just looking here at MODG, it's one of those beautiful kind of reversals. It's been sitting in a range for the last, what was it, since July, the summer. And you're breaking out of this trend line here on this weekly chart. You're this reversal is just is it's once it turns. So will it go higher, or will it stick in this range, will be the question you have to answer on this one. But structurally overall, this break of this resistance zone here at $10 is it's just beautiful. It broke out of that zone, wants to reverse back into that breakout zone. So it's structurally, it's holding strong for sure. And there's a lot of different things on this one that you could do. You just passed earnings. If you could pull up the monthly chart real quick, I think it's better to see. You pull up the weekly. I think the monthly is just telling itself too. The monthly, you got even a bigger trend line here, and you're breaking out of that 20 monthly. So it definitely has some momentum here, and I think you do have another leg higher. So if you strategy wise, you can do different things. It's cheap enough. You can just buy the shares. I was looking at the options here, and the options are a little murky. I think you just have one strike, which is a 12 and a half. That it is liquid, but
Yeah, it's tough.
yeah, it's just tough. So if I
Plus
was
it's
to
ten
do
dollars.
yeah, no, for sure. I mean, if I was to do options, my strategy on options would be kind of how what you kind of mentioned on the last one would be, buying that 12 and a half. And then once you do get that confirmation above, maybe, selling a call against it, to turn it into a free trade. So that would be an option strategy I would do on MOG. But I think for me, I would stick with, just the straight stock play. And for me on my entry, I would, you could go over today's candle. But I think your hair is away from breaking that 1098. So I would
Mhm.
wait for the confirmation above, just so you're for sure you're breaking above that zone. Stop loss I would go under yesterday's candle, which is around I believe it's about 1034.
Yeah.
So entry over 1098, stop below 1034. Target wise, if you go back to, if you actually can pull back up the monthly real quick, there is some support zones, or there are some resistance zones, sorry, around that $12 zone. I was looking because you can see there's that prior pivot down there at around $12. So for me, my T1 would definitely be $12 because you have that zone there. It just goes back farther. Plus, I would probably do a T2 around $13, and that's where that moving
Mhm.
average is. So
Yeah.
T112, T2 would be around 13. Just a straight stock play. I think, like I said, it breaking out, getting some momentum here definitely can, give us another leg higher.
Yeah, I love it. Matt, thoughts on MODG here?
High quality reversal on the longer term time frame, I would say. And Bobby's got a swing trade setup, and I have no issues with the swing trade setup here. Like you're breaking, everything looks good on the daily time frames. Targets are fine. It's a conservative swing trade. Not it's really well prepped. Wouldn't make a change there. The only suggestion I would have is thinking sometimes we swing traders can get so caught up in our swing trading mentality that sometimes we lose the longer term a little bit. And this is a high quality reversal, in my opinion, that probably has an edge until it starts getting into 15. And so I
Mhm.
think position traders, and again, I'm not trying to talk Bobby off the swing trade. Swing trade looks really good. I'm just saying, like the position traders as well would like this setup. It's a breakout on a multiple time frame situation, and I think the biggest advantage the Bulls have here is the breakout against that weekly monthly trend line. That weekly monthly trend line has been pretty consistent for the last couple of years, and this thing took some time to digest, but looks pretty good, I would say.
Yeah, love it. All right, MODG is now been thrown out there in the gauntlet. Let's see Matt's answer to that with TW.
Listen, me and Bobby's bringing some high quality stock trades to round two here on the reversal analysis. And believe me, I wish there would have been high liquid options. We could do a lot of crazy option strategies, but sometimes not a bad thing. Just buy some shares and do a stock trade here, Bobby. That's how I see this. When I saw Top Golf as a good reversal, I got TradeWeb TW here as a pretty decent reversal in its own right. This is what we call a W formation. W formation stands for winner, winner, chicken dinner. It's a double tap at the low point. If I can draw a horizontal trend, that'd be great. And it's a double tap at the top point, creating short-term consolidation, creating a W formation. So you have a W on the daily chart. Now, one thing that kind of when you look at here, support's really consistent here. And yet, there's no support here. Like, there's no catalyst there. And so, there's an old concept in the marketplace, and it's called the principle of polarity. This old concept, and once again, if you don't understand these words, principle of polarity, and all the reversals, I got a class next Monday, Tuesday. Hit the link in the description. But the principle of polarity is old support, old resistance is interchangeable and becomes new support, new resistance. And the strength of the pivot will go to the strength of the future support and resistance catalyst. You have a major pivot at the 102 level right here. So it's the 100 to 102 zone is what it is. But you have a major pivot back in October, November of 22, right there at that 100 zone. And so this pullback, once again, we're talking long-term analysis. Let's pull up the fib on the long-term analysis and let's see where this bad boy is going. Oh my goodness, it's also right at a 50% pullback on the monthly time frame as well. So when we're talking about that level, okay, that level, once again, coming back down to the daily time frame, it didn't come out of nowhere. It might have looked like that on the daily chart because there legitimately was nothing on the daily chart. But you got a massively important pivot back there. You got a significant whole number right underneath it at 100 to kind of help support the reversal, and then you're in a longer term 50% clip against that long term trend. And so, good reversal at a key level of support and resistance on the longer term analysis. This is a fractal trend and pattern within the grander landscape of the overall technical environment. So now that's what I like about the pattern, the zone, the pattern. Now let's talk entry, stop, and target here. Entry here, there's a couple of different ways I think you could look at this one. My first one, we were talking about a firm had already confirmed. So you're just talking about the level or your entry rule that you need to apply. We have not confirmed here, which means if you're an aggressive trader, you would anticipate confirmation by getting your order into the market above the pivot point, which would most likely be right around this level right here. I don't think you would have to wait till the 112.50. I just think you're looking above the wick here. So the high of today is like 111.21. I think anything above 111.21 would equate to confirmation here.
Mhm.
So ultimately, the aggressive trader says, I'm anticipating confirmation by getting the order into the market that will get triggered in as it does go up and does, in fact, confirm. The conservative trader would simply wait for a candle close above the 111 level to signify that, like a good friend Jesse Livermore told all of us many times, many years ago. Confirmation is the insurance. You're right on your projection. If we're projecting this bad boy is going to go to 120 by 130, well, at first it's got to close above 111 to get to 120 to 130. So confirmation is the key. So that's a dealer's choice. That's up to the trader whether or not you want to be aggressive in applying your entry, whether you want to be conservative. I do like the slightly more aggressive approach here, but that is a dealer's choice type situation. Now that's entry. Stop loss again, playing a reversal off the daily chart. I'm going to gauge 9 EMA and use the 9 EMA as the stop loss placement initially. When you're looking at kind of what you're really trading here, is the pocket. And a moving average pocket is the vertical distance between two like moving averages. And pockets, much like gaps, have a tendency to fill. Not all the time. That's a misnomer. Like gaps fill. Nope, that's a misnomer. Some gaps fill, a majority of gaps fill. And I would say a healthy majority of gaps fill over the longest time frame. Same concept here in moving average pockets. Not every pocket fills, but a large percentage of moving average pockets fill over time. And what you're really playing is the vertical distance between the 9 EMA on the weekly chart and the 20 SMA on the weekly chart, which is a 10-point pocket between 111 and 121. You also have a pivot point right here at 120, which means the first target zone is right here around the 120 to 121 level. We'll just call it 120. That 20 weekly will most likely converge to 120. Second target would be the second pocket up to 130 on the weekly chart, which also equates to the 200-day moving average on the daily chart, which means this trade is a trade by 120 by 130. And what the real trade is, it's a moving average pocket fill positioned as a swing to position trade. And that's what I got for TradeWeb. I would love this. I love the reversal here. I do not love the liquidity on the option side of the equation. You got wide bid-ask spreads, and it's just frustrating, quite frankly, when you got wide bid-ask spreads. You look at the volume and the open interest. Yeah, you got open interest here, but nobody's trading it today, and for good reason, which means they tell us to trade the shares in that environment. So this is going to be a share trade.
Yeah, yeah, and I do like stock when you can. You can always position size according to risk
I
and
think
all
people
that. So
discount stock too much. It's 1-to-1 without the headaches.
yeah, a lot of simplicity in stock. You can get executed a lot faster and cleaner and all that kind of stuff. So stock can work here as well. I love all these picks, guys, and love that we're bringing some reversals here, to show some different patterns that are developing out there in the market. If you're out there, you're watching the show, let us know what's your favorite out of that second round. Do you like MODG or TW? Bobby, any thoughts on TW before we wrap it up and get final thoughts from the team?
I had this one on my list, as I was scanning this afternoon. It was one that I was going to wait for confirmation, but after Matt's analysis, I think I'm going to go back and take another look at this one just to see what I can, scrape up based off that analysis. But, for me, I'm going to stick with MDOG because over the years, Top Golf has taken a lot of money from me. And so I'm
Oh,
damn determined
we
to
see
make
what
that
you're
back.
doing.
So
He's like, I got data at Top Golf. I
Yeah.
got to make some money.
oh yeah. So no, I'm gonna stick
Oh,
with
there is nothing better than making money on a company you really get to spend that money on. That is true. Makes like you got a free golf trip.
Yeah, it's true.
Yeah, I
And I,
know.
That's how you feel.
yeah,
I'll tell you,
no question.
if it was pure, like I like them both. I think they're both fantastic, honestly. Bobby's got a great technical eye. Um, I think if you're looking at the purity of a reversal, you like TW more. If you like kind of something that is already in progress to a certain extent, you like Top Golf more because Top Golf it looks pretty good on that weekly chart too. Like that weekly chart on Top Golf looks really, really good. Tim, I'm putting your feet to the fire. Which one of these reversals does Coach Tim like?
I like the W pattern on TW post earnings. I like the momentum building into that, resistance breakout. To me, this setup, it just screams simplicity. I've always loved these type of patterns, that momentum change into the trend, moving averages curling around. I'd go TW. So, and I'd go Google on the first one. So I'm split between you guys. I got Bobby in the first round. I got Matt in the second round. I'm not the tiebreaker tonight. We need the team out there to kind of let us know who is
First of all,
going to be the winner.
hopefully we're all winners here. And I say hopefully we got to see that price action live out. But in my heart,
Yeah.
Bob, we're all winners, brother.
Yeah.
Team, MODG or TW? It's tough for me. I like them both. I'm going to stay with TW because I do like the purity of the reversal. But if you wanted something in progress, MODG is better than that because it's already confirmed. It's already
Yeah,
got a little Momo. So looking
the great
pretty
team tackle
good.
member.
Team, let us know in chat which one you prefer. And if you're watching it after on the on demand on YouTube, let us know in the comments section.
Linda's saying MODG. So when Linda Vasquez
Linda's going to
speaks, I
take
gotta
whatever
listen.
the one is more aggressive. That's what Linda always shoots.
Good to know.
That's
Good
funny.
to know.
Yeah. All right. Guys, thank you for
And
being a
she
part
must
of our
really
community
like
out there.
MDOG if she's going against me. I feel personally offended right now.
No, you don't. Yeah, you're fine. You're a little bit tougher skin than that. All right.
Yeah,
Maybe. I don't know. Should we
I'm
dive into
seriously
that?
offended. Me and Linda
Thank
are
you for being a
having
part of our
deep
community out there.
conversations later on today. No, I kid, I kid, I kid, I kid.
Uh, Matt, pitch master traders, and let's get out of here. It's been a great show.
Once again, if you like Trade Masters, you're going to love Master Trader. Starts next Monday and Tuesday, 6 p.m. Eastern Standard Time, 2.5, 3 hours per session. So basically, your commitment is about 5 to 6 hours over those 2 days. And I promise you, it's going to be some of the best 5 to 6 hours you've ever spent in an educational setting. You'll get more out of Master Trader than you'll get out of any foundational class at any point in any other company out there. I promise you because, well, I teach it and I know exactly what's in store for you. So if you want to come learn how to read a chart like a pro, master technical analysis, there's not a better course than Master Trader. And the best part about it, Tim, is Master Trader's free for pro members. Whether it's once, twice, thrice, or 50 different times. Yeah, I have students that attend Master Trader literally every single month, regardless of the situation. And so whether it's, this your first time or you're coming back as a repeat, as long as you're a pro member, you can be part of Master Trader every single month. And so to get to be a pro member, hit the link in the description below. Sign up for a free trial membership, get access to Master Trader, number one, and also the Traders Report, the newsletter, and everything else we do in our pro membership. Love you guys. Had a lot of fun today in Trade Masters. I'm going to go back and forth. Trade Masters, Master Trader, Master Trader, Trade Masters. I had a ton of fun here. Bobby, you're the absolute best. I'll let you guys kind of sign us off. Bobby, you first, and then Tim, give us some final thoughts.
Yeah, no, I mean, if you haven't, if I could be in a contestant to this, Master Trader was, I think I was at the very first one you've ever did, and me being a veteran in this community, I've learned so much just from that session with you. So if you're out there and you want to learn a lot about this community and learn a lot about just stocks in general, I definitely would attend Master Trader for sure. And on Trade Masters, the last few weeks, the picks have just been off the charts. Last week 3M off the charts. STLD was another one, I think. So it's just I think what the content that we're producing here at Tackle is just it's next to none. So like I said, if you join Master Trader if you can.
And when you do, you
Yeah,
get access to the
100%.
Master Trader Playbook as well, which I just did the rewrite, and it is full of technical goodness. Technical goodness. By the time I get done with this rewrite, it might be a couple of years, but by the time I finally get it done, and by the way, when I mean get it done, it's like 80 pages already. But you get this
Mhm.
for free just by signing up for Master Trader as well. You get the Master Trader playbook as well. So hopefully I see everybody there. And with that said, Tim, send us out.
Yeah, it's no brainer, no doubt. All right, traders, it's going to wrap it up for this week's Trade Masters. Big thanks to Matt and Bobby for bringing the heat tonight. Thank you for all of you in the chat for, participating, keeping the energy high. If you haven't already, hit the like, subscribe, and make sure you ring that bell as well so that when we do go live, you'll be notified and you can come in and pop in with us live. If you want to take your trading next level, make sure you get that trial. Join the Master Trader program as well. That's going to be next week. And book a coaching consultation and join our community in Discord. We got a vibrant community over there in Discord. We'll be back next Wednesday, 6 p.m. Eastern, with more setups, more insight, and another round of Trade Masters. Until then, trade smart, stay disciplined, and keep mastering the markets. We'll see you next time.
Later, team.
Later.